right, let's get right into it. There's something huge happening kind of just below the surface. We're seeing this quiet but massive rotation, a major shift of both money and technology in the worlds of crypto and AI. And it's not just a small change. We're talking about a fundamental move away from the established giants and towards new open platforms. Today, we're going to break down this great rotation. And it all really kicks off with one big question. We're going to follow the money on a single, absolutely colossal trade that, believe it or not, tells us pretty much everything about where the smart money is heading right now, and more importantly, why. And the stakes here? They're incredibly high. Just this week, the market saw over $1.2 billion in liquidations. I mean, that's the kind of pressure cooker environment we're operating in. And when things get this intense, the big players don't just sit on their hands. They make big, decisive moves. They rotate. So to really get why these huge moves are happening now, we've got to first understand the incredible pressure that's been building up across the whole system. Here's the big picture. Global markets are, well, they're nervous. You've got the Fed hinting that interest rates could stay high, and even the AI sector, which seemed unstoppable, is starting to show signs of slowing growth. All this uncertainty is causing a major pullback in crypto, and it's forcing investors to go hunting for safety and for yield in some new places. And you can see the ripple effect right here. You know, for years, Bitcoin was the undisputed king of crypto. But look at this. Its dominance is actually starting to shrink as serious capital flows into Ethereum and other alternatives. This isn't just a minor blip. It's the start of a really fundamental change in how this market is structured. Now, this isn't some slow, gradual drift. No, it's being driven by massive, intentional pivots. And there's one trade, one single trade that tells the entire story perfectly. This is it. This is the trade. One crypto whale, a huge player, sold a staggering $433 million worth of Bitcoin. And what did they do with that cash? They bought nearly 100,000 Ethereum. This wasn't just rebalancing a portfolio. It was a statement, a massive, massive bet on the future of Ethereum. And you know what? That whale wasn't alone. You can almost think of it as the first domino to fall. Because in August, institutional investors came flooding in right behind them, pouring close to $4 billion into new Ethereum ETFs. So what's really fascinating here is how this whole thing is changing the roles of these two giants. Bitcoin is now being seen more and more as a hedge against volatility. It's like digital gold. But Ethereum, with its staking yields and all these new institutional products, it's becoming the liquidity anchor for the entire crypto world. It's the place you park your capital to make it work for you. And if you want to see this rotation in plain black and white, well, here you go. The data doesn't lie. You're seeing these huge positive inflows for Ethereum ETFs at the exact same time that Bitcoin ETFs are seeing money flow out. The great rotation isn't a theory. It's happening right now, in real time. But get this. This rotation, this move away from a single dominant player to a more dynamic ecosystem, it's not just happening in crypto. We are seeing the exact same kind of upheaval in artificial intelligence. And it's also being driven by this incredibly powerful, democratizing force, open source. So for anyone who's not familiar, an open source AI model is basically a state-of-the-art digital brain that's been given away to the world for free. The core code is made public, which means anyone, you, me, a startup, can use it, can tweak it, and can build incredible new things right on top of it. And this is a huge deal. A company called DeepSeek just dropped a monster of a model with 685 billion parameters. You can think of parameters as like the neurons in an AI's brain, and 685 billion is just an absolutely massive number. This is top-tier, world-class performance that directly challenges the big tech giants, and they just gave it away for free. So think about the chain reaction this kicks off. It's pretty simple. Step 1, incredibly powerful AI becomes free. Step 2, startups can now build unbelievable new tools without needing millions in funding. And step 3, the pace of innovation for all of us, it just goes into hyperdrive. Okay, so we've got this super powerful free AI floating around. What's the next logical step? Well, it's integrating it directly into the fabric of the internet itself. Tech giants Microsoft and Cloudflare just rolled out something called NLWeb and AutoRag. Now, forget the complicated names. What this does is actually really simple. It teaches websites how to talk to AI. It creates a universal standard so that AI agents can understand and interact with any web page automatically. So why does this matter to you? Well, imagine telling your phone, hey, find me the best deal on flights to Tokyo for next June and book it. And it just does it by itself, by seamlessly interacting with all the airline websites. This standard makes that possible. We're talking automated research, simplified coding, a truly intelligent online experience. The web is literally getting a brain. All right, so let's just pull back for a second. On one hand, you have the financial world rotating towards these more dynamic, programmable assets. And on the other, you have the digital world getting infused with open, accessible intelligence. When you combine these two megatrends, the entire landscape begins to change. And the institutions? They are officially here. I mean, in a move that would have been unthinkable just a few years ago, the United States has formalized a strategic Bitcoin reserve. They are officially holding Bitcoin as a reserve asset right there alongside gold and other currencies. This is mainstream acceptance on a massive governmental scale. So what's next? For the crypto rotation, all eyes are going to be on Fed commentary and jobs data. And for the AI upheaval, we're watching for the next big open source model to drop and for wider adoption of that new web standard. The bottom line is, in both of these fields, the pace is not slowing down. And it really all comes back to this one idea. This single quote just perfectly captures the new reality we're in. Ethereum is where liquidity and yield now live, while Bitcoin solidifies its role as the ultimate hedge against uncertainty. Which, of course, leaves us with one final, absolutely fascinating question. We are stepping into a world with powerful AI in our pockets and decentralized assets in our government's treasury. These two powerful rotations are now officially starting to converge. And when the future of money meets the future of intelligence, the real question isn't just what happens next, it's how fast.